The first hole, again, that we drilled into this specific conductor intersected that high-grade mineralization. Now, a couple of other notable features and points to talk about. One, it's sandstone hosted and it's relatively shallow at about 340 meters. So it lies, the mineralization lies just above the unconformity. It's also open in pretty much every direction, in most directions. You know, obviously one hole, you can only garner so much information, but we expect that with additional drilling, we're going to be able to grow this new discovery into something much larger. It's open along strike and into the underlying basement rocks. Potentially, there's lots of room to move here.
Hello, everybody. Welcome to the next big rush. I have here with me back again, Jordan Trimble of Skyharbour, which is the, I want to say, longest standing project generator in the uranium space. Is that correct, Jordan?
Yeah, we're up there. I mean, we've been around for just over 10 years. You know, there's other junior companies that have been around longer. There's obviously a whole bunch that have come to market recently, but we're definitely, I'd say, for in the junior exploration codes in the basin, I'd like to think we're, you know, a well-known name now, having been around for a little while.
Yeah, and with a very unique business model as well, because I know a lot of companies that are kind of all or nothing. And I think you guys have the upper hand when it comes to that with all your different projects, JVs, etc. So I have been talking about and really more pounding the table about you guys' campaign on your flagship projects, Russell Lake and Moore Lake. And you guys went out there during this winter season and you drilled those two properties. And you have just come out this week with, you know, results from both camps. So please, what happened to Russell? I see you have a high grade, you know, 3+% discovery there. Why is this considered a discovery if you did have, you know, some uranium showings back then? And what does, like, paint us the picture of what this means for Russell Lake, please.
Yeah, absolutely. So, look, this is a major, you know, new development for us. It's a breakthrough as far as the discovery process is concerned at that project. Yes, we're a prospect generator, but let's not lose sight of the fact that we're focused on our exploration and discover and making discoveries at our two co-flagship Russell and Moore Lake projects. Now, you know, I've talked at length about both of these projects previously, but just as a kind of recap, Russell Lake, we're optioning from Rio Tinto. It's a strategic asset just south of the McArthur River Mine in northeast of the Key Lake Mill. The haulage road runs right up through the project. There's power lines there. There's an exploration camp that we're staging out of, that we're inheriting from Rio Tinto. It's a big property in prime real estate in this southeastern part of the Athabasca Basin. Now, it's still at an exploration stage. The adjacent project in Moore, which is our other advanced stage exploration asset that we're advancing, is a more advanced stage project in that there is high grade there. There's several high grade zones in the results that we announced at Moore Lake. We went in to expand a known zone of high-grade mineralization as well as test some regional targets. But it's important to put that in context. And so just moving back to Russell, because as I mentioned, a major development there with the exploration. We announced earlier this week a drill intercept of up to 3%. Over a half a meter, and that was within 2.5 meters of 0.72%. Now, it's important to note that this drill hole was the first drill hole that intersected a conductor in what we're now calling the fork target or the fork zone. This is a new target area that had very little to no historical drilling. And one of the main reasons for that is it's almost directly under the power lines that are adjacent or parallel to the road. And so that historically interfered with the geophysics and made specific drill testing and targeting much more challenging. And so there just wasn't a lot of historical drilling or work. Now, it is related, we believe, to the larger target area just to the north and to the east called the Grayling target area. As you may recall, this was a target that we were focused on last year in 2023. When we acquired the project in 2022, we really went in there and focused in on this main target area called the Grayling target area, which is multi-kilometer. There's widespread mineralization. It had been drilled historically over the course of several decades, but really still looking to go. We were looking to go and make a new high-grade discovery. And we had some decent results, but what we decided this year was to change that up a little bit and start looking at some other targets outside of that kind of main Grayling trend. And so this fork target, our geologists did a phenomenal job late last year going through all the historical data and basically stitching together all of that to refine drill targets. And sure enough, the first hole, again, that we drilled into this specific conductor intersected that high-grade mineralization. Now, a couple of other notable features and points to talk about. One, it's sandstone hosted and it's relatively shallow at about 340 meters. So the mineralization lies just above the unconformity. It's also open in pretty much every direction. In most directions, obviously one hole, you can only garner so much information, but we expect that with additional drilling, we're going to be able to grow this new discovery into something much larger. It's open along strike and into the underlying basement rocks. Potentially, there's lots of room to move here. So that's what we'll be testing with this upcoming drilling. And then again, when we get back talking about the strategic location, this new zone is just 500 meters from the road. As I mentioned, it's right almost directly underneath the power lines that run up alongside the road. And relative to other deposits in the area, it's quite close to our exploration camp, as we talked about, but we're only about 4 kilometers south of the Phoenix deposit, of Denison's Phoenix deposit. As you know, Denison's a large shareholder of Skyharbour, and Dave Cates, their president and CEO, is a director of Skyharbour. So, it's a great step in the right direction for us at this project. This is just the second drill campaign that we've carried out at Russell, and it's been quite rewarding now to have identified a new zone of high-grade mineralization that's open for expansion. So we finished up 5,000 meters of drilling. This was one of the drill results. We did drill a couple of other holes at a few other target areas, including the M zone extension, which is about 4.5 to 5 kilometers northeast of the Grayling target and this fork target area. Assays are still pending, so we are expecting some additional news flow in the coming weeks and coming months. And then we are going to recommence drilling, and we're fully budgeted, fully permitted and fully funded for another 4,000 to 5,000 meters of drilling at Russell this summer. And that'll take us right through the summer into the fall, and that'll generate a lot more news flow. And again, we're extremely excited to go back and continue hopefully delineating a much larger zone of mineralization here at this new fork target. So again, a major development, a breakthrough in the discovery process at the project, and a lot more news to come in the coming months.
Let's move on to Moore Lake, because that was something that I was really looking forward to, due to the fact that you guys have, you have known that there is high grade uranium there, and this is more of a follow up of what more can you find, and you've just come up with news about that, and it seems like it's an even better hit than Russell Lake. Can you expand on that?
Yeah, so Moore Lake, as I wanted to provide some context to it. Moore Lake is a more advanced stage exploration project than Russell. There's been a fair bit of historical drilling, previous drilling that we've carried out at the project. So we did announce here shortly after the news release at Russell, we announced the results from the 3,000 meters of drilling that we carried out at Moore Lake this last winter. It's important to note too, given the Russell Lake camp and the road, It makes our life a lot easier at Moore Lake as well. It brings our drilling costs down quite significantly. And across both the projects, on average, we're now drilling at well under $350 Canadian all in a meter. So definitely one of the lowest cost drilling campaigns that you would see anywhere in the basin with any other exploration company, especially those projects that are more remote. So you get a lot of bang for your buck drilling these two projects. Now at Moore Lake, we, for the first time in a couple years, decided that it made sense to go back in and continue expanding and working at the main high-grade Maverick zone. So there's basically what you've got is a 4.5, almost 5 kilometer long conductive corridor called the Maverick Corridor. It's well known to us and our shareholders, as it's been a focal point for us since we acquired the project back in 2016 and 2017. We actually made a new discovery there back in 2017 at the East Maverick Zone. This was a step out from the main Maverick Zone, and we intersected some high-grade mineralization back in 2017 and 2018. And actually, the more recent drilling that we carried out at Moore Lake back in 2021 and a little bit into 2022, those were the last programs that we conducted at Moore Lake prior to acquiring Russell. We were having success drilling into the underlying basement rocks at these Maverick zones, and in particular at the East Maverick Zone, we announced back in 2021 a 2-meter zone of 6.8% U3O8. But this year we decided it made sense to go in and continue delineating the high-grade zone of mineralization at the main Maverick Zone. Now, this was discovered years ago. There's grades as high as 21% over 1.5 meters. That was in a drill hole that we announced back in one of our first drill programs when we acquired the project in 2017. And we went back in there to look to expand that high-grade zone of mineralization. And we had success in several holes, including the highlight hole, which was a 3-meter zone of 7.3% U3O8. Within that, there was a higher grade zone of 1 meter of over 10% and a 0.5 meter of up to over 15% U3O8. So it just shows you the strong tenor of mineralization. It's high grade, and importantly, it's shallow. It's the most of the high grade mineralization along this Maverick corridor that we've discovered thus far, because it is still open along strike, is hosted right at the unconformity, predominantly in the sandstone between, call it 260 to 280 meters. So relatively shallow, which also makes the mineralization quite interesting in the context of some of these new mining methods that are being proposed in the Athabasca Basin. That's also one of the reasons we wanted to go back and try to expand this high-grade zone as much as we could. There was another hole that we announced, a nice long width of 11.5 meters, intercept of 11.5 meters of 1.1% U3O8, some higher grade mineralization within that. So very strong results at the project. And I think it's reminding people that, Skyharbour, it doesn't just have Russell or some of these other projects as a part of our prospect generator business. We do have Moore Lake, which has really been one of the crown jewels for the company for a while now. And there's still a lot of resource expansion potential there at the Maverick corridor, both along strike and at depth in the underlying basement rocks. But there's also regional blue sky potential as well. There's about a dozen other regional targets that in most cases have mineralization, have had limited drilling historically, but have all the right indicators and ingredients for much larger deposits and zones of uranium mineralization. So there's still very good upside potential at Moore Lake as well as at Russell Lake. Now going forward, I mentioned we're planning a drill program at a summer program at our Russell Lake project, about 4,000 to 5,000 meters that we're fully budgeted, fully permitted and funded for. And we are going to carry out another 2,500 meters to 3,000 meters of drilling at Moore Lake as well. So similar size program to what we just finished, about 7,000 to 8,000 meters combined in this summer drill campaign that'll commence soon. That'll take us right through the summer into the fall, and that'll generate a lot more news flow. Again, we're thrilled to be going back and continuing to explore that new fork discovery, as well as to continue to expand the high-grade zones of mineralization at the Moore project.
Well, you just answered like my next 10 questions. That's exactly it. So we see that uranium now is having, it seems like another moment of excitement. I'm sure that your view of it is slightly different from just an investor's point of view, because you get the calls, you get the interest from, you know, the possible JV partners and things like that. But right now we're at, you know, this kind of sweet spot where we see the long-term price of uranium continue to climb, and not really listening to, you know, naysayers and the swings of the up and downs of the spot market. And then we've just seen that Kazatomprom is going to be paying a little bit more for, well, I guess profits at the end of the day. It all comes down to profits. They're a very profitable operation, and their profits are definitely going to be squeezed. You know, the government is going in there and, I guess, balancing the royalty system out, or the taxation system out, so that they're more in line with other sectors like oil and gas, which means that it's going to fill up different pockets, not so much, you know, investors, but more of the government side and the locals, which, you know, fair game to them. It's their resources, so they can do that. But what is happening is, as a response, people are starting to look at uranium stocks again. There's a bit of a shift, there's a bit of an excitement, and, you know, the stocks are doing fairly well this week. What is your view on, you know, this strange thing that we have going on? Because it's, you know, middle of July, it's not supposed to be exciting. There's not supposed to be much of a bump. But not only are you guys coming out with news, you have partners that are going to be coming out with news. And then you have your summer drilling program. How do you see this market, and how are you going to be able to feed into this market with all the news that you guys have coming out?
Yeah, no, it's definitely an interesting time right now, given the, you know, the season we're in. We're very well positioned to deliver a lot of news flow, catalysts, opportunities for, you know, real value creation through our news flow at our two co-flagship Russell and Moore projects, as we just discussed. But, you know, as you're well aware, we've got a few dozen other projects that are in the Skyharbour portfolio. You know, again, we've got interest in 29 properties throughout the basin. 7 of those are partnered out for under option, and 3 now in proper joint venture partnerships. So we've got lots of partner-funded programs and news flow coming up as well, and you know, we've talked at length about that. So we're poised to benefit from, you know, this continued rising tide that we're seeing in the uranium market. We are getting a lot of additional interest now in some of the other projects that we have not optioned or JV'd out yet, even just in the last few days, as we're seeing you know, this rally in the uranium space, getting a lot of inbound interest as companies are looking to come into the Athabasca Basin, or you know, companies that already have properties are looking to expand their project portfolios. And, you know, we're one of a few companies that has a big inventory of exploration projects in the basin that these companies can come to. And so I expect we'll be announcing additional option agreements and property deals in the coming months, which will add to the news flow, and also bring in some cash and stock. As you know, we've benefited from having some of these projects monetized and partners working on them. We haven't had to go and raise a hard dollar in a private placement financing in almost 4 years now. So, you know, it's a hybrid model that we employ, and it's working, and we're going to continue to expand on it. Now, talking about the uranium market and, you know, where we're at, I mean, look, it's an interesting time of year to see a bit of a rally here. Not unusual to see softness especially in the uranium equities this time of year. I mean, if you look at the charts basically for the last 4 years. It's pretty much every May through, call it, early August, where there's, seasonal weakness in particular in the equities, the summer doldrums, if you will. And we were sure into that. We have been suffering through that here for the better part of the last few months. But this news out of Kazakhstan, as you just highlighted, increasing the taxes. It's a sliding scale. So with more production volume and higher uranium prices, the tax rate goes up to potentially 18 to 20% from the current 6%. Now, the interesting thing with this, as you talked about, Kazatomprom obviously will have to pay more taxes, but 75% of Kazatomprom is owned by the Kazakh Sovereign Wealth Fund. So I think it's a little bit of the left pocket, right pocket thing going on here, at least for Kazatomprom. Who is it going to impact? Well, it's going to impact the JV partners, right, that have minority interests in these projects. And I also think it could subdue maybe the rapid ramp up of production, right? So you might see, I'm not sure, how much of an impact it'll have, but if they were to just ramp up very quickly, which, that's a whole different topic of discussion. Obviously, there's issues currently with with their production, with the lack of sulfuric acid. Their next quarterlies are out here in just over a month. So that'll be interesting to see what the guidance is from Kazatomprom. That was a big catalyst just under a year ago, as we know, and earlier this year for the uranium price spiking up to over $100 a pound. So, there's a lot kind of brewing here in Kazakhstan. And yeah, this announcement of the tax increase seemingly sparked a bit of a rally. But, it's not just one thing. I think it's important to note there's a confluence of factors at play here. We've talked, and your audience knows very well, the underlying fundamentals for this commodity are incredibly strong. There's a major structural supply deficit currently. The primary mine supply just simply is not there. The supply side, again, we're out of this era of abundant secondary supplies, right? Whether that came from downblending of weapons, whether that came from underfeeding inventories, this era of secondary supply abundance is behind us. And so, I think a good way to think about it too is, it's kind of unprecedented, right? I think expect the unexpected here going forward. And, the supply side is also being strained right now with the East versus West market bifurcation, right? We just talked about Kazakhstan, but, I'd be remiss not to mention, the events over the last year in Niger, right? Niger's 4% of global primary mine supply, been a big supplier for France and nuclear utilities in the Euro area. So that, I think at this point, I think it'd be tough to argue that that supply is going to be secure, reliable supply for Western utilities going forward. There's just a major East versus West supply demand imbalance, right? A lot of production out of the East, places like Kazakhstan, Uzbekistan, Russia, Niger, call it, and a lot of the consumption and currently nuclear fuel requirements are still in the West, still in the United States and Canada, in Western Europe. So this already significant global supply demand imbalance is even more exacerbated when you look at it through the lens of East versus West, and I don't think that that's going to get any better. And then you look at the demand side, right? And this is, I think, the really exciting kind of thesis and driver currently with this commodity is it was always in the last few years kind of a supply driven story, whereas now in the last few years in particular, we're really starting to see the demand side kind of come into its own, right? So you've got obviously the unprecedented buildup of nuclear reactors in places like China. and other parts of the developing world. But what's fascinating right now is to see, the West in particular completely do a 180, right? So you're seeing reactor restarts in the U.S. and other parts of the world. You're now seeing, hearing about decommissioned reactors that no one thought were going to possibly come back online. There's talks of some of those coming back, like 3 Mile Island, for example, in the United States. And then, the advent of small modular reactors, right? I mean, this is a nascent market, an emerging market that I think is going to be a massive source of new demand, much like electric vehicles were for battery metals or have been over the last, 10 to 15 years. This could be that for uranium demand. And one of the big talking points, obviously, and you've talked about it with your audience, is AI and the data centers. I think looking at some of the recent numbers, over 7,000 data centers either operating or under construction globally. So that's over 500 terawatt hours of electricity demand, well over that of the entire country of Italy. And so if you triple that, which is by some forecasts, that's expected within the next decade to call it over 1,500 terawatt hours. That's more electricity consumption with these data centers in 10 years than all of India, right? And so what's going to power that, right? And there's been obviously a lot of attention and news on nuclear being a primary source of baseload emissions-free electricity for these data centers and for this electrification that we're seeing. And so I think that's going to be a major source of new demand. The small modular reactor is the perfect solution. You co-locate an SMR with a big data center. It's 24/7. It's affordable. It's reliable. And I think we're going to see that be a big part of the demand growth going forward. So, there's, again, a confluence of factors at work here. And I think, it's always tough to make predictions on price, but, we saw the price obviously peak at about $105 to $110 a pound in the spot market. It's obviously pulled back, but it's tested this kind of $80 to $85 a pound level now 3 times. And clearly, there's support there. And that's significant because now we're building a base around this price, around in the mid 80s here. And the utility companies and the buyers are having to come to terms with this new norm, right? I mean, a year ago, we had talked $80 to $85 a pound. I think we both be pretty happy with that prospect. And here we are. And then we're talking about it as if it's at the low end of its trading range.
It's like it's a bad thing, right?
Yeah. So, I mean, that I think just goes to show that, there's, one, we're building a new base here. And it's important to note, I mean, we talk a lot of, the spot price obviously gets a lot of market attention. Again, it's always important to look at, obviously, the long-term price, the contract price. That's really what matters at the end of the day. And we've seen that price continue to tick higher. And, you look at the spot price at 105 or 110 and, the term price at $70 to $75. Needless to say, there was probably going to be, a correction in the spot market, which there was. But, we're seeing this term price continue to move higher. And it'll be interesting this year, later this year in particular, because we haven't seen all that much long-term contracting volume this year. I think we're going to see a whole bunch of long-term contracting towards the end of the year, in particular with the U.S. utilities that have been on the sidelines for most of this year, waiting to get some guidance and some clarity on the waiver process for the Russian ban. Well, that's coming up here. And they have to get these waivers. They've already been given notice, force majeure, if they don't. And so I think once that kind of comes to pass in August, they will. I think most of them will get the waivers. What I'm hearing is the waivers for shorter term delivery shouldn't be too difficult to get. But as time goes on, it's going to be tougher and tougher to get those waivers. And then ultimately, there's just no nuclear fuel that can be imported from Russia, right? So, ultimately they are going to have to adjust, and they are going to have to start relying more heavily on Western suppliers. So once we work our way through this year, the WNA is just around the corner in London. I think there's going to be a wave of new contracting. And look, at $80 to $85 uranium, these new contracts, it's going to be interesting to see the terms and the pricing on those contracts with this new base built here. And then I think it sets the stage for the next leg up. And I think it's going to be a very exciting 6 to 12 months ahead for uranium companies and for investors in the sector.
Yeah, call me crazy, but I think this is the easiest call to make, that it's likely going to be a really exciting rally this coming fall, because the stars and planets are all aligned for it, and supply is just dwindling. And with ever passing, month to quarter, there is more and more news, always seemingly positive on the demand side and negative on the supply side. It's like, we could not have asked for a better setup than this.
Yeah, and I think when you look at it, I mean, we talked about Skyharbour has been around for over 10 years, so we've had the benefit, I guess, of seeing the good, the bad, and the ugly. And the reality of the market right now, I think, is look, there was the exact opposite of what we're seeing right now. That played out for a number of years, post Fukushima, where it just seemed like it was one negative news headline after the next. But the reality of it is, the supply demand fundamentals have shifted. We've come out of this era of secondary supply. And look, it's not easy to bring new uranium mine supply online. It's that simple. What we're seeing now is a result of years of underinvestment in the sector, and you couple in geopolitical issues and this market bifurcation, and absolutely, you can rationalize, you can understand, what's happening in the context of all of that having happened over the last 10 to 15 years.
For sure. That's what we're here for. We're here for this rally. We've been working hard and placing our bets. Actually, you've been working hard. I've just been watching and making bets. And we'll keep watching Skyharbour for sure, and looking forward to the last few holes that you have pending, and also for all the upcoming exciting drilling programs that you guys have. So let's catch up soon enough, as soon as those other results come out. And thank you very much for coming on, Jordan. I hope to speak to you very soon.
Thank you very much, and looking forward to catching up again.
All right, cheers.
See ya.